guys, Scott from FatB Trader here. Just want to bring you a quick update on a couple of trades we took, and also, more importantly, a video lesson on stop hunting or the stop run zone. Now this is a very, very important lesson to learn, because it's one of those things that when you're not thinking like a professional trader, you're going to get caught out with this all the time. It happens more frequently than you would think, and basically, not to say you can't make money around it, because you certainly can, but you just got to be aware of it so that you can adjust your positions accordingly. So let's have a look at this Euro US dollar. Now this is a 1 hour chart. Now at the moment, obviously it's in a downtrend. You can see, obviously if we go back much further, the trend is coming right down. So at this stage we're having a little bit of a pullback, a little bit of a retrace, which is a great place to be looking to take sell trades, which is what we're doing at the moment, because fundamentally the euro is screwed. That's a technical term, by the way. So looking at where we're targeting the 124.48 or 124.50 level. Now we've taken a trade against this level, 125.35. Again, we were talking about this the other day, where the market was coming up and I had a very short-term buy trade, and then I was looking to sell into that, which is what we've done. And I was hoping to get a little higher price run, but obviously this was a stop run. This is, see this massive little wick coming up here? This is actually where you get to a point of support and resistance. The price forces through, and all of a sudden the people who are waiting to go short pile in and essentially, cram the market with their orders essentially. So that's where I've got in there, and I had my my sell price around the 25.35 level, which is about here, I think, and it's obviously didn't get filled until 25.20, so which is pretty crap, but it's the way it goes when you're in that sort of situation. Not phased really, because at the end of the day I'm targeting much lower. I'm targeting essentially 70-80 pips, so whatever, that's not a big deal. Missing on a bit of slippage, it's not like you're going to not be profitable as a result of that. So what I did want to bring your attention to though is there is this point here, obviously prior high 125.75, where most people would place their stop. So if you were taking a sell trade, or you'd sold anywhere down here, you probably would have placed your stop above a previous high. Now that is just a red flag to not necessarily brokers, but other traders, professional traders, large funds, whatever, that are looking to get short as well. Potentially they may actually be looking to push or use these zones as shorting points, if that makes sense, because everyone loves the breakout trade, right? People love this breakout trade effect, but often, and quite often, maybe even 7 times out of 10, that doesn't work. Basically the trade fails at that point and then retraces. So breakout trading, whilst it can be successful, it's not a high probability strategy. Certainly on the short-term charts. So, at least in my experience, I mean, you might be a breakout trader that just kicks ass, but, you're obviously doing something different to what I do. So, looking at this, though, what often happens is you get these stop runs. Now, how did I know where to place my stops? You can see where my stops are. My stops are up here at 126.20, which is well outside that stop zone. I mean, obviously, I've gone back 1, 2, 3 highs before actually putting my stops in. Now that's a fair way away from price, but I'm taking this trade with a longer term perspective. It's got a fundamental view to it. Like I said, the euro is getting smashed and crushed, so with these trades I take a smaller size so that I can place my stop a long way away from this sort of rubbish, because it's nothing worse. And I was talking to a student last night who was looking to place his stop at 125.78. Now we talked about why he shouldn't do that, and he actually moved the stop to where I had my stop, and as a result he's still actually in the trade. What I do is size down so that if it moves 100 points against you, it's not the end of the world. It's not gonna destroy you, your account, which often most novice traders don't actually do. And look, that's just one of the things that separates the professionals from the amateurs at the end of the day. getting stopped out in an inappropriate place is obviously going to cost you in the long term, because as you can see, the trade has immediately reversed around. We're obviously looking at this. We've zoomed into the 5-minute chart here, just so that you can see how dramatic that turnaround has been. It's basically been crushed after that and moved nearly 100 points, 76 points in the opposite direction. So you'd be pretty annoyed if you had been stopped out at this point and you were short at this point. Yeah, because you would, it's just ugly. So, alright guys, I hope that all makes sense. If you've got any questions, you can reach me at FatBTrader, or you can follow us at profit.ly. Please leave a comment in the comment section below. We love hearing your comments, and as always, till next time, trade well.